G'day, welcome gold traders. It's been a long time between videos. Thank you for your patience. Welcome back to one of my special gold class presentations. Hope you enjoy. As you all know, remember, quality advice and quality advice. Make sure the people that you listen to are qualified and also got the experience. You know, you can have qualifications but no experience. Or you can have experience but no qualifications. So, yeah, not all good players make good coaches, and not all good coaches were good players. Bit of a, story there, but you can understand what I'm trying to get at. Okay, the only truth is the result, and you've got to make sure someone's got a good track record before you even listen to them. General advice, please. If you want some specific advice, mate, email me or send me a message. You all know how to get in touch with me. You see me on the internet everywhere. Okay, so I'm trying to stay low. I'm not everywhere on, Instagram and all the other platforms like I used to be. I had websites as well myself years ago. I'm toning it down a bit because I want to be semi-retired, guys. So, but you can still get a hold of me, okay, and I can help you get some specific advice because everyone should have a bit of gold to protect themselves. Gold is an insurance policy. That's all I'm going to say. Gold is your best insurance policy. And when do you need insurance? Before the crash, yeah? You insure a car, yep, and then the next day you have a smash, you're covered. But you can't buy gold after there's been a big collapse or after there's been some type of world geopolitical event. It's silly, okay? It's called chasing your tail, okay? Don't chase prices. Let prices come to you. Alright, so it's very important to get good quality general advice. I'm giving you general advice at the moment. If you want to know how much exactly and how to buy it and what's the best way to buy it in your individual country, talk to me. Alright, you've seen it before if you've looked at videos before because it's the same slide. Okay, yep, the faces change, the names change, but their game doesn't. And that is to devalue your purchasing power. Okay, entrap and enslave the next generation. That's it. That's what the central banks have done for the last 100 years. And it's now picking up pace. Okay, picking up pace. Gold versus paper, the US printing press. I'm telling you, I get excited looking at the printing press because I know that we're in our final stage. It's all going parabolic. Alright? Every country. Japan, Europe, America. I'll pause this here for a few seconds. You can stop it and read it later. M1 is you and I. M2 is you and I with a bit of wealth and putting money in the bank. M3 is the big institutions and all of the big boys. Okay? So we need to track M3 if we want to know where the real money is flowing. Alright, M3, Euro supply, Japan supply, it's growing parabolic in 2021, 22. Absolutely going parabolic. We're in our final stages for the printing press. Okay, remember in 2006 the M3 data was stopped being private, just easily shared. Okay, now you got to dig deep for it. This was what happened in 2008. We know what happened 2008, QE1, 2009, QE2, QE3, kept going, yeah? And this little peak that we had, where we double our money and then double our money, is nothing compared to what's going on right now from 2020 onwards. Look at it. I can guarantee you we are in the final third stage of the printing press. It will not be sustainable much more longer. Can we go to 2023, 2024, 2025, printing all this money? Maybe, perhaps. No one knows exactly when. The sentiment will change. The faith in paper dollars. Well, looks like paper dollars is already just about wiped out over the next 12 months and will be all digital. Wait and see how that goes. Alright, there's still going to be some type of cash around, I hope. So remember, the M3, you can get a hold of it at the fred.stlouisfed.org. Alright, I'll leave that there. Copy that website down. Very handy website for many good charts. The M2 money supply up close. You can just really see it. We've just trotted along nice and slowly through 2018, 2019. Get to February, March 2020, and then boom, doubled overnight again. Alright, the money supply is being pumped uncontrollably. Now, what kind of effects does that money supply have? Well, great question. Here is a 50-year-old chart on gold versus the money supply. Yep, wherever the money supply goes, gold just keeps playing catch up, and then gold will go overshoot, catch up, and then come back to M2 to rest. Shoots off again, comes back to M2 to rest. And I believe gold is only beginning to shoot upwards, okay, to play catch up. So we've got some big years ahead for gold. Alright, how can someone get your head around a trillion? How can you get your head around a quadrillion? How can you get your head around a quintillion? I like the sound of sextillion, yeah? But unfortunately, guys, these are numbers that just don't make sense to you and I. But I can tell you, the big top 20 richest families in the world have already got a plan in place so that in 5 years, their children will be quadrillion. And they know that the next 50 years, when all that is finished, they know that them children will be quintillionaires. And they know that when they're well and truly dead, and their oldest son right now becomes the grandson and the godfather of the family, there will be sextillionaires. So, large, wealthy families do project well and truly into the future. I was at a Commonwealth Bank Australia seminar, and the CEO of the Commonwealth Bank of Australia said, our board is currently making business decisions based on your children's ignorance. Let that sink in. Our board members are currently making business decisions based on your children's ignorance. Think about that. Alright? It's a big one. So that's how the big wealthy people play. They know masses, and they know masses real well. It's a money game. Yeah? Keep feeding the masses what they want. Alright? Ignorance. Alright? We know just how bad things are getting right now. Hyperinflation looks like it's coming, but is it really hyperinflation? Is it true inflation? I don't think it is. I'll explain it to you very quickly. Inflation is generally sustainable when we have wage growth and good solid growth pushing up the inflation price. But what are we getting? Right now we're getting massive devaluation of our dollars because of the printing press doubling overnight and then doubling again. And therefore it's creating hyperinflation in depreciation. Okay? Our dollars are being depreciated. Okay? They're being devalued. Okay? If your dollar was worth $1, it's now worth 50 cents. Your dollar's worth 50 cents, it's now worth 25 cents. That's how quickly it's been eroded. Okay? And it's been eroded very quickly over the last 10, 20 years. So if you've got wage growth of 2 or 3% and you get inflation of 3 and 4%, that's standard inflation. And that keeps going. If you start getting wage growth of 5 or 6% and inflation of 7, 8, 9, 10%, then you're starting to get into hyperinflation. But you've got no wage growth. You've got no long-term fuel to say that once the money printing stops, that inflation is going to continue. No way. There's no drive behind it. It's just artificial money printing that's created this inflationary bubble that we're in. So beware. I'm not a big believer in a massive inflation cycle yet. You've been talking about it for quite a few years. Everyone knows. You can even go back and look at some of my presentations from 2020, 2021, 2022 even. You've seen a lot of the stuff on crypto. We've been talking about crypto and how its role into the future. I just want this to sink in right now. Forget about the coins. Coins will be good, but it'll be the code. And then most of all, every person, every single company around the world will have their own credit card, yeah? And their own credit card, crypto credit card, alright? Just like you can have a Visa card and your own bank, okay? But it's still a Visa, it's a system that connects to the Visa, okay? You go get a store card and it's connected to Visa. So again, you'll have a store card or you'll have your own bank card, but it'll be stored to either the EFRA network or whatever, okay? I just don't think Bitcoin's going to be there. It'll be like the American Express card. accepted in some places, but not accepted worldwide. Visa, it's accepted worldwide, okay, except for in Russia right now. Right, so just remember, this sanctions that are taking place right now, it could be speeding up the process, okay? We could be seeing Union Bank in China now gaining rapidly the petrodollar market, okay? Because if the US dollar is now forbidden to be trading in Russia, they're going to use their own currency now and connect it up to the Union Bank. All right, let's see just how that moves over the next 3 to 6 months. It's a game of chess, guys. Game of chess, and we think we've just sped the game up by these sanctions. Visa's now not the only banking system. Now, where will SWIFT be replaced? And when SWIFT is replaced, it's definitely ready to go, XRP. Okay, it's just a matter of when. When they're ready to flick the switch, it's going to be ready. Alright, Ethereum, it's already set up as, the next Visa and the next stable coin that will take place of all central banks. Okay, all central banks are signing up to Ethereum. All individual banks are signing up to XRP. So you can just see where the big money's flowing. Alright, when exactly will this happen? Well, there's some progress happening along the way. I think you have to write down January 2023 is a big date for Australia. That's when we start blockchain up for our transactions on our share market. So keep an eye. Go Australian share market blockchain and read up about it. Yeah, Australia will be one of the first countries to buy and sell all shares listed every day on their share market by the use of blockchain. Pretty cool. Some big moves happening. Alright, remember inflation versus deflation. I've gone on about this in the previous video, and the one thing you've got to get your head around is, don't worry. If you've got a bit of gold, inflation will protect you, the gold will protect you. If you've got deflation coming, gold will protect you as well. Okay? Inflation versus deflation, it's a debate that's easily won, and Robert Kiyosaki talks about it back in 2006, 2007. He even continues on about it with his other quadrant books, and it's all based on the baby boomer spending, okay? There's a lot of people that do study demographics, and they're really good at it. You should know them, okay? Get to know and understand that if there's less people younger to hold up the current spending, as you get older you slow down your spending, and there's not enough young people to hold the price, well, we're in trouble. How many 30-year-olds and under can afford property now? So there's no way that property can be continuing to just spiral out of control, out of reach. At some stage, all these wealthy 65, 70-year-olds are going to sell one of their, 3 properties, and then they'll sell it and dump it, and then they'll sell the second one as well. They only need to have the one, and then eventually when they get to 75, 80, they're not even going to need that one. They're going to need to sell that one so they can get into a home or downsize to a smaller home. So then there's going to be 3 properties on the market instead of just the one. So there's going to be an oversupply coming based on demographics over the next 5, 10, 20 years. So I don't see property performing the next 20 like it has over the last 20. Look at the population of Japan. It's leading the way. It is the oldest country in the world. The bell curve, okay, it's shaping, it's getting shape, it's getting thin. Very top heavy, right? Even as we look as a world population in whole, 1950s was great. We had 0 to 5s, 10s and 20-year-olds as the major base, and then once you got to 60, 70, it trimmed off. Then we started living longer, and we're having less children in 2000 and 2010, 2015. Totally shaped. They reckon by 2100 there'll be no generation underneath, and the biggest generation will still be the 50 and 60 year olds. Okay, and then we're going to live past 80 and go to 85, 90, 95, 100. So that's a recipe for disaster with our current systems. We can't keep feeding the current systems like Medicare and all the debt that's feeding into holding up these systems. So it's going to crash. Global debt, 210 trillion. That was 2019. What about now, 2022? You Google search global debt now, I think it's up around 380. It's doubled, almost doubled. Not quite, almost doubled. Alright, so just remember, we're in a transition period here, 2018 through to 2025, where we will cross over and then become into negative rates. Negative everything. Everything's going to be negative. Okay? There'll be no need for you to have any money in the bank. No one will want to have money in the bank because it just gets eroded from purchasing power. So the old 100 years of holding money in the bank and, you know, you're going to have other assets. Money in the bank won't help you. Alright, why would you want money in the bank when at negative interest rates? Why would you want money in the bank even if it isn't negative interest rates? I'm sure you can make better decisions with your money and earn better rates of return than 1% and 2% and 2.5%. This chart I've shared nearly at every single video. Just remember, the 1980s was the peak in the first baby booming wave. Okay, from the First World War, they all got to 60-year-old and then they all retired. Okay, it was a peak in spending. Okay, Second World War, we had the peak again in 2008. What happens is this: the more in debt a person is, the less higher the interest rate needs to go to have the effect of slowing the economy. Now let's check it out. In 1980, we had interest rates hitting 20%. Property prices were $50,000, and you know, you have a $10,000 deposit, throw in $40,000, and pay it off in 4 or 5 years. Beautiful. That was the best times to be alive. Yeah, go buy 5, 10 properties if you could. Knowing what you know now would have been brilliant, but unfortunately you didn't. So another 10 years later, people still went through a property cycle, but this time we only need to go to 10% because property prices were $100,000. We had $10,000, $20,000 deposit, and most people had what? $80,000 to a $90,000 loan. So there was twice as much borrowed. So therefore you didn't need 20% interest rate to slow the economy down. Go to 2000 now, and property prices are now what? 200,000, and we have $160,000, $180,000 loans. So therefore we only need what? 5.5–6% interest rate cycle to peak and slow the economy. We go now forward to 2020, you're only going to need 2–2.5%, because property prices are all 300,000, 400,000, and even in Australia they're all 600 and 800,000. But as a general global economy, and you can see where we are at, you can see how everything's doubling every 10 to 15, 20 years, and we only need half the amount of interest rate that we needed before to peak and slow the economy. That's what I'm getting at. So when I look at the 2022 to 2023 rate tightening cycle that has just begun in the US, it already begun 6 months ago, 7 months ago, 8 months ago in most countries. South Korea, South Africa, you've got UK and New Zealand joining the party, Singapore joining the party. Australia is still many months away from joining the party. But we've got a good chunk of the world, at least 12 nations around the world raising rates, okay? And that rate tightening cycle will lead to another downturn. Where will it downturn from? I reckon put your money on 2 to 2.5% interest rate. Don't expect it to go much higher. As I said, the reason behind that I've just shared with you. 50,000, 20%. 100,000, 10%. 200,000, 5%. 400,000 in debt, 2%, 2.5%. As we all get into more debt, you don't require much of a rate tightening cycle to cause a slowdown. The Great Reset will happen again. 1933, roughly 100 years. Somewhere before 1933, we'll have a reset, and then we'll start seeing a new system, and then we'll see proper inflation again with a new system. Confidence in a new system, confidence in a new world. What kind of world is that? Well, it's definitely going to be a digital one, absolutely. How much will cash play a role in it? No idea. Will bartering still be allowed somehow? I'm sure there will be. Yeah, there's no reason why I can't swap my beans and corn for your potatoes, or I can help you dig the garden and plant it, and we can share the crop. There's going to be a lot of bartering. We're going to need to work together more. We know now Russia, we know from Canada, all these things that are great. GoFundMe, all your PayPal accounts, all your bank accounts, all electronic, can be frozen anytime by the big IMF and the Rothschilds banking system. So that's what we're facing into the future if we go fully digital. You need to have physical gold. You need to have physical gold. Davos, May 2021, was the first talk of the Great Reset. And as you know, it came and went. Yeah. And what did they talk about? Did you ever read up on it? Well, ever since May 2021, they've rechanged this. They don't have all that up no more. It's been taken down, it's been reworded, and they've changed it all. But yeah, I kept lots of good snippets from it. So I remember what they were talking about, and I remember the next dates. Alright, so what exactly is the Great Reset, and what will it be? It's a combination of multiple systems heading towards the reset. Okay, all the systems need to be ready to be crossed over. Now, when will they do this? Will they do this with an old and tired dinosaur US dollar? No way. They're going to do it with a new world currency. The Great Reset will happen, and we'll have a new world currency at the same time. So, talk about the world currency. Let's talk about the current US dollar and its world currency status. Right, during the last review, November 2015, the board decided that they'd introduce the Chinese renminbi for the first time. Okay, now you can hold Chinese yuan for your collateral, your liquidity. Okay, you've got to hold. You've heard many companies do bank stress tests. Yeah, part of your bank stress test is you've got to hold what, 20% or 15% of your cash flow. Yeah, you've got to be liquid. Okay, some people, I think China, they lower the threshold sometimes to help banks provide more loans. Sometimes they'll tighten the bank thresholds so they can slow the economy down. Okay, to stop the banks from over leveraging at the top. Okay, they can prepare the banks for problems in liquidity in the future. And these SDRs are special drawing rights. Okay, so if you've got your special drawing right basket, you don't need to hold US dollars as the world currency. This world currency basket, okay, US dollar is still 41%. Okay, as the world currency, it's still the #1 weighting world currency. Euro is close behind it with 30%. Chinese yuan just all of a sudden appeared and overtook pound sterling and Japanese yen. All of a sudden in 1 year, just appears and now owns 10% of the world's weighting for liquidity. Scary. Okay, now look here. October 1st, 16. Okay, every 5 years they have a review. Okay, IMF resets every 5 years. So look here. On March 2021, they were set for a reset, right at the same time as Davos's Great Reset. Yep, it was coming. It was all setting up for it, but they weren't ready because of COVID. COVID knocked things back a bit. Did you also know that the Australian share market was also set to go full blockchain in 2021-2022, but it's been set back 2 years, as I shared before. January 2023. Watch the Australian share market. It will turn into full blockchain for all settlement of the shares on the Australian share market. So just remember, July 31st, 2022 is the new reset date for these SDRs. Okay, they delayed March 2021 because time wasn't ready. The economy's ready. July 31st, 2022. What are they going to do? Are they going to delay it again? I don't know. I don't think so. So get ready. Watch what the IMF do on July 31st, 2022. And this gives you a window over the next couple of months to buy some gold as cheaply as you can. I don't know if it's going to go back down below 1650. I don't know if it's going to go to 1750. I can't tell you exactly if it's going to go back to 1900 and down to 1850. But it's coming to 1900. It's bounced off 1900. It could come back again and bounce below 1900 again. It looks like it will come back a bit more than 1900. And I hope that we get a good buying opportunity in the next coming months before this event. Okay? Be ready. The IMF will reset again these basket of weightings in the next couple of months. So what will happen? Let's just say the US dollar loses 5%. Let's say the euro loses 5%. Let's say the Japanese yen loses 2%. Maybe the pound sterling might gain. Watch out. I'm surprised. I've got some good charts that I shared on the actual British pound, and I'm quite semi-bullish. They've broken out of the euro for a reason. Okay, they are trying to be a bit more strong again. So they might hold 8%. They might go to 9% or 10%. But the big winner will be the Chinese yuan. I can expect it to be 20%. It's going to be up there with the euro. It's going to be a 3-horse race. 33%, 33%, and 33%. Alright, but it won't be exactly like that because you've got these other 8%ers, so it'll be what? 25, 30%, 25, 30%, 25, 30%, and the other 10% made up here with the other ones. So be aware, what you're going to see is, no doubt, the Chinese yuan will take more percentage of the SDRs. Okay, banks around the world will be able to then hold more Chinese yuan as their collateral. Okay, as their bank stress test. They've got to have that liquidity. All right, they can hold the currencies, and it will be deemed special drawing rights. You can write in what they call the fractional reserve banking system. That's what we've been born into. There's not a person alive that has not been born into any other system. The banking system is a fractional reserve banking system. You save up $1,000, you put it in the bank. Excellent. The bank gives you what? 1-2% interest from that. Excellent. The bank goes out the door and lends it to another bank, and then that other bank will then turn around and lend it out to 20 to 30 times. Gets a $20,000 loan now. And that person with a $20,000 loan leverages it out to 300,000, and that 300,000 leverages out to $1 million. And then what happens is, when everyone wants their money, sorry, I've only got $1,000. Well, where's the rest of the millions? Sorry, I've only got $1,000. That's fractional reserve banking. 1 in 30 people will get their dollar back. 1 in 30 people will get their dollar back. That's the current state of the fractional reserve banking system. So these special drawing rights help hold a balance of currencies that every bank around the world, and all the IMF bank around the world, will have this as their golden rule of thumb. So don't be too much in one currency, because it's too dangerous these days with the fluctuations of the currencies. But a stable SDR will give you a stable spreadsheet, okay, a good balance sheet. Alright, so remember, July 31st, we've got to go to the IMF website. We've got to find out more about this great reset. You've got a couple of months to buy, you've got a couple of months to do your own research. How will gold react to this great reset? Interesting question. What is possible? Just remember, the great reset. What exactly is it? We've got to know more about the great reset. What is it? How is it going to react? Gold's already reacted a bit to the hyperinflation. Gold's already reacted a little bit to, our geopolitical tension. Remember this: gold is the best insurance policy. You don't buy car insurance after you've had the car smashed. No, you buy your car insurance today. You're insured tomorrow. You buy gold today. You're insured if there's any more geopolitical tension. You're insured if there's any more hyperinflation collapse. So you've got to guess yourself. You've got to make sure that you're not just chasing prices. You're positioning yourself for future inflation, okay, or future geopolitical. Future insurance is needed. All right. So yep, we could come back to 1850, 1820, and kiss goodbye. That'd be the worst case scenario I see. We could have a flash crash that takes stop losses below 1650. That can't be ruled out. We do have these quick dips before gold flies. We'll talk to you more about technicals in a minute when we get to the proper charts. But let's look at the ingredients behind why gold hasn't gone through the roof over the last couple of years. Okay, we all know Bitcoin has. All right, from 3.5 grand to 20 grand, back to 3.5 grand, back up to 40 grand, 50 grand, 60 grand, dipped, and then went straight up to 68 grand. Smashed 68 grand, came straight back down. And I'm happy to know that Bitcoin's been a good, in the words of Jerome Powell, a good substitute for gold. Okay, he's telling people that Bitcoin is a substitute for gold. Yep, cryptocurrency is a substitute for gold rather than dollar. Okay, don't worry about gold versus Bitcoin. Gold and Bitcoin just do whatever. Okay, but yeah, as gold, I'll share it with you in the next chart. It's a good one. Okay, you can see that the gold chart and the Bitcoin chart are moving very similar. They move very similar. They are indeed a safe haven away from the US dollar. When the US dollar gets too top heavy as a safe haven and the share markets are too risky, gold and Bitcoin will make a rally at different times. Here we go. We've got a nice 50, 60-year-old gold chart, and you've got a 20-year-old Bitcoin chart. overlaying them, and they're pretty much mirror image. Okay. Now let's look at it up close over the last 4 years. I want to share with you something that not many people will tell you. Gold versus Bitcoin. There is no argument. Okay. They are both in a bull market. Yep. And they rally at different times to each other. So own both. Own both. When Bitcoin tops and breaks trend, great, buy some gold. When gold tops and breaks trend, great, take some profits out of gold and buy some more Bitcoin. Simple, duh. Gold rallies, Bitcoin catches up. Bitcoin rallies, gold catches up. Check it out. It's pretty simple. Gold will go sideways, Bitcoin flies. Bitcoin goes sideways and gold flies. So Bitcoin going sideways now, it's time for gold to fly. Alright, gold versus Bitcoin. Now, I'm sharing with you this, something very special. I normally only share this stuff with my special Turtle students, okay? Paid subscription. But I'm giving you a real big gem here. And even you traders that are watching this video that have been trading for 10, 20 years, if you're not aware of the 1.114 fib level, you should be. Alright, 1.114 is roughly the average wave out on a fake breakout. If it can't hold the kiss goodbye, the retest of the new high, then it falls back in. Okay, gold did this in 2020, and everyone that's watched these videos know that I was the only person in July in 2020 at the peak of the COVID disaster, and I called for Dow to go back up to 40,000, and I said the top in gold, and I even said watch gold go back to 1700. Okay, I've even got the charts to show you, but get your head around this. Gold rallied through and hit 1.114 and then dropped back down. Gold versus Bitcoin. Look at Bitcoin now. Bitcoin, okay? It went 60 grand, 64 grand, popped out at 64 grand, then came back down for a good dip, all the way back to 30, then took off like a bull again, out to 1.14, and then fell again. If you're not using 1.114 in your technicals, well, I don't believe that you're trading wisely. It's good to pick up any fake breakout to new high. If it rallies more than 1.14 and kisses goodbye, then you know that you're genuinely safe that it is a new high. Okay, and it's going to be sustainable. Most of the time it's just noise. Noise can be measured under the 1.114. Pretty cool? Enjoy. Alright, so remember, hopefully I'm clearing this up. There is no argument. You need to own both. Okay? Maybe not just Bitcoin. I wouldn't say own just Bitcoin. Okay? Maybe have a little tiny bit of Bitcoin, but have a bit more money in Ethereum and have a bit more in XRP. But at the same time, you can't not ignore what is happening with all cryptos. Okay? Yep. And just like when you buy, you know, if you're going to go $100,000 investment into the share market, you're not going to go buy all the 10-cent stocks and 20-cent stocks. And you're not going to go buy all the $1,000 stocks. You've got to have a variety of top 20, a couple of good upcoming top 200 explorers and small producers. And then you can go for the penny stocks as well. And see, crypto's no different. Get a little tiny bit of exposure to your top 5. Find some good quality, good technical and fundamental, you know, top 100. And then once you got established, put little 5% plays in all these little 0.001 stocks, okay? And all the Dogecoin and SafeMoon and all the crazy ones that just meme stocks, really. They're just meme cryptos. They just take off, okay? So remember, it's about leveling out your risk, diversification of your portfolio, including your crypto portfolio. Gold is no different as well. You've got the ETF gold. If you've got a really good margin loan or you've got exposure to shares, buy the ETF. Yep, it will help your exposure with your shares. If you've got no share portfolio and you don't need any ETF, then all you need to do is buy some physical gold. Okay? So depending on what level of investor you are at, depends on how much gold you need and what kind of gold you buy. And remember, it's the same when it comes to cryptocurrencies. If you're right now being blocked from your bank, but you can still get access to crypto, then great. Your crypto might be able to keep some food on the table. Alright, keep you liquid. So it's all about diversifying your wealth into all different income and assets. Okay, sell some good quality collectibles and create cash flow. Alright, there's so many things you can do. My old gold prediction from 2010. Alright, very simple. Up she goes in 2010 in a parabolic J curve. We followed up 3 major moving averages. It was going to keep following one of them moving averages, and it did. It followed the first one, crashed and came back to the second one, crashed and then held on the third one for a bit, and then finally kaplunk. Away we go. 2 years later, 100% return. Are we about to see something very similar? There is a good chance that we could see that same result. 100% return in gold in the next 2-3 years. Alright. Your first target high for gold, your first low in gold. Go back and look at the recent videos that I've done. You should know what this chart is. It was Larry Edelson's last ever cycle chart that he shared with me. I did a teaser video back a week ago, and Larry was saying top in gold 2021. Back 2 years ago in 2020, I was saying no, it's going to more like be 2022, 2023. Okay, so my call back then was a bit more accurate. Why? Because we know that what Larry didn't know, the whole COVID thing has caused 2 years of a stretch. Gold went sideways for 2 years as well. Why? The Great Reset was all still happening, but not happening yet. Alright, so get ready. Gold and the Great Reset, it will become a good asset to hold. Yep, I'm not saying we're going to return back to gold reserve currency, no. But we'll have a basket of currencies. The SDRs will create the new world currency. Alright, but based on the old cycles, I was expecting it to bottom, and it did. Okay, it did the bottom. We expected it to go up to the top, and it did. Okay, it all comes true when you're patient and look at the large charts. Look at the longer term cycles. Watch your fib levels. Remember that 1.14. Alright, this was my chart that I shared in July 2020. Yep, it did. It topped out right on my 1.114 fib level, and then did it fall to the green zone like I expected it? It sure did. Okay, that was my last one that I shared in, I think it was February or March 2021. Yeah, it would have been February. There you go, you can see it. Only about 8 weeks old in 2021. So it would have been February 2021. Alright, and there it goes. Came down to the fib level, came down to my green zone, caught up on the yellow trend line, and it's taken a bounce again. Alright, so that's the current gold short term where we're looking at. Okay, remember, you've got a few waves to go. Alright, gold is only in its beginning, its birth stage. Short term, yep, we can come back for some kisses, but buy as close as you can to that yellow trend line. That's the best friend you've got at the moment. The trend is your friend. Alright, so we've gone up. This is an extra close up and an extra bonus. Now, remember the old high of 2000 back in 2011? Well, now I'm using the high from 2020, July 2020, and I've got my 1.14 out. So that's where I expect the first wave, serious big wave of gold to go to. Watch when it gets to 1.14. That's currently around 2,117, 2,120, 25, somewhere in there. Alright, so keep an eye. It will poke its head above 2,100, and watch out if it's not sustainable. Remember, the first test of a bull is to come back and test the old high. It must hold the old high. Here's an old high. Breaks out, holds it, and it keeps going. Breaks out, it's coming back again to the same old high. So watch that position we're at right now. Very important. 1900 is critical. The 2022 roadmap is still unchanged. Okay, we've got some hieroglyphics here sideways. Got a bit of a breakout now. Back to the fib level. Back to that yellow trend line. Watch that yellow trend line. Buy the dips as close as you can to the yellow trend line. We'll have another big dip sometime in 2022, 23. Sometime when it gets liquidated. Everything will get liquidated. Gold's no exception. When we have a liquidation crisis, gold will be sold off too, just as much as the share markets. Because as you create a margin call, you get created margin calls, you get liquidated out in everything. Okay? It doesn't care. You get close all positions, even your ones that you're in profit. And then we got the final wave. 2023, there's something big happening. right? Something big is going to happen, and it could be the Great Reset. I've shared with you enough information. I've shared with you some good dates coming up to watch out for. Please be aware of them. July 2022, IMF, Global Bank, SDR, reset. So remember, buy gold when you can next afford to do so. And please, stay safe wherever you are around the world. Continue to do what you can do to stay safe. I can't say build up 3 months of food. I mean, I've tried building 3 months of food, and you know what happens? You get bloody what? Stupid bloody creepy crawlies in your rice and all your flowers. So there's so many things you just can't do any more than a month. So just, I think, you know, if anyone can really survive more than 3 months with long life stuff, brilliant. I think, you know, most people would die after a month of not eating. So if you can survive for more than a month, you're probably going to be the last 50% of the world standing. Anyway, what's going to happen? There is a food shortage coming. We can see that. You can't eat gold. You're going to go very hungry trying to eat gold. So don't just throw all your spare money into gold. Don't throw all your spare money into the Dow. Don't throw all your spare money into, you know, any currency. Diversify, please. There's an old rule, 10% of your portfolio should be invested into insurance. Sometimes when the situation is ideal and there's a perfect storm coming, you might want to increase that exposure 15% or 20% maximum. But you don't want to put all your money into gold, please. Gold is an insurance portfolio. Why would you want to pay more for, you know, let's just say a 2000 Ford pickup truck, and you get $500 insurance, and that car gets written off, you get that money back, and all you have to do is pay $500. Why would you want to pay $1,000 or $2,000 insurance? Exactly. So the same thing again. I'll give you an example. Back in 1990, I was taught to buy gold as an insurance hedge against your share portfolio. In 2001, it came true when gold went from 250 to 450 as the share markets fell from, you know, 10,000 to 5,000. So what happens is, as the share markets lose 50%, gold will double. Same thing happened again in 2008, 2009, and 2010. Share markets fell 50% and gold doubled. So remember, if you've got 50,000 exposure in the share market, you probably need 20,000 gold, and you'll be totally neutral hedged. As you're making money in the share market, you're not making any money in gold. As you lose money in the share market, you'll make that money back in on your gold. So wealthy people know these systems and how to insure their portfolio. If you haven't got $100,000 or 50,000, great. Start with 5,000. You know, break it up. $500 gold. Okay. As you get to $2,000 or $3,000, great. Keep increasing your gold. Keep roughly 10%. It's a rough guide. Okay. There's certain times in your life where you want a little bit more gold than 10%. But remember, you can't eat gold, so you've got to make sure that it's going to be kept in small liquid chunks that you can sell off. No use having a big 1 kilo chunk of gold and it's $100,000 worth. How many people are going to have $100,000 to give you to sell the gold to? A bit like having $1 million property right now, yeah? There's more people that can afford a $300,000 property than a $1 million property. So therefore, if the property market does fall, which properties are going to fall the most? The $1 million one or the $300,000 ones? Yeah, you guessed it, the $1 million one. It's the same thing when it comes to your gold. Small chunks of gold where people can afford to buy it. That's the most liquid. So it's good. I can go anywhere and sell a bit of gold anytime I want. As interest rates go up through the roof, if they do go up through the roof, and I can't afford my investment property home loans, then great. I'll sell a bit of gold to, you know, sacrifice for the extra income that's required with raising rates. Don't be scared. Okay? Use your assets to your own advantage. As interest rates rise, gold will rise. So you sell a bit of gold into the interest rate cycle to keep your property portfolio liquid and safe. Some simple advice there, folks, for anyone. Remember, gold is an insurance. Buy it when you can next afford to do so. And please, talk to me if you want more advice on gold or any kind of insurance. Take care. Thanks for your time. Stay safe.